This is Shah, and today I want to take you straight into what is happening with Bitcoin because the price action right now is sitting in a very sensitive zone and every move is carrying weight. When we talked yesterday, we focused on the importance of reclaiming the 91,000 level. The market did push above it for a moment, giving everyone a quick spark of excitement, but the same thing we discussed happened again. The daily candle could not close above that level, and that single detail changes the whole tone of the move. A wick above resistance is never enough, and once the candle body settled below the zone, it confirmed that buyers were not strong enough yet to flip that level into support. When we zoom in on the structure, the head and shoulder pattern we marked earlier is still completely valid. It remains the only negative element on the chart right now, and the fact that price failed to close above the head of the pattern keeps it active. This pattern does not confirm just by existing on the chart. It confirms when price loses key support zones, and that brings us to the levels that matter most today. The broader market is in waiting mode. The FOMC meeting on Wednesday has traders holding their breath, and you can feel that indecision in every candle. Volume is shaky. Momentum keeps fading on every push upward, and volatility is squeezing tighter. But even with all of that, Bitcoin still has one strong thing going for it. As long as it holds the trend line, the bullish structure stays alive. That trend line has been respected again and again, and whenever price dips into it, buyers step in with confidence. From the perspective of the head and shoulder pattern, if Bitcoin wants to avoid a deeper pullback, it must hold above the 88,000 zone. That is the line between continuation and correction. Staying above it keeps the bullish narrative intact and basically cancels any immediate danger from the pattern, but falling below it opens the door to a retest of the 86,000 support level, and that zone has acted as a demand area many times before. A deeper wick from there would not be surprising, especially with the market waiting for the FOMC volatility. For now, the key story is simple. Bitcoin tried to reclaim 91,000 and failed to close above it, so the level remains resistance. The head and shoulder pattern stays active until a clean breakout candle closes above the head area, and the trend line is the main support keeping bulls in control. Hold the line and the market continues building strength. Lose the line and the pullback becomes the dominant scenario. Stay calm, stay patient, and keep your eyes on these levels. If you want more daily updates like this, where we break down the price action in clear and simple words, make sure you keep following along so you never miss the next move.